Hey there, it's me, Joe Polyak, local real estate agent here in San Mateo County, San Francisco as well, SF Bay Area as a whole. I'm going to do another market update video today for the County of San Mateo. The data has just been released by Oculus. Again, we're going to merge this in. It's the screen recording, it's me talking, and this is the Oculus data. Again, thanks so much Michelle Ronco, thanks so much MLS Listings, thanks so much Oculus for providing this data. So let's go piece by piece, take a look at how things have changed and what's going on. So as everybody knows, we've been in shelter in place for a few months, and it looks like it's coming back, or it is back. They closed down the gyms again, and restaurants are still able to be open, no indoor seating, but we're slowly navigating all of this stuff. So let's start with sales volume. So as you see here, in July of 2020, we had $952 million of sales volume. The previous high was in May of 2019. And so usually our hottest months where closed sales are the highest is May of every year for the most part. Obviously, because we had a March shelter in place, April shelter in place, May shelter in place, all this pent up demand caused a bunch of sales to happen in close in June, and now July really illustrates that very high sales volume, which is most likely a record because we are at or very close to our record prices in general. So let's take a quick look now at the median sales price. So this is also going to be for single family home data. We don't have condo data. Again, that would take a long time in the video, so I'm just going to go through single family homes, and if you have specific questions about condos or other areas, then I'll be happy to go over that with you. Now, we're taking a look at May 2019 was median average sales price, or median sales price, 1765. And then March of 2020, 1750, we saw a little bit of a drop, came back up just a tad bit, and then in June, 1738 with just a small drop in 1725. So what does that say? That shelter in place has not really had any kind of major, meaningful, negative or positive impact on prices. So prices are hovering around the same. But what we are seeing is that July closed sales since 2016 is 434. No other year has it even broken the 400 mark. So that's pretty significant. It showed that a lot of the pent-up demand, or a lot of the pent-up sales that would have happened in March, April, May, ended up happening in June, July instead. Now, San Mateo County new listings that hit the market. So we obviously saw June 518 homes. 518 homes do not come up for sale in June of any year quite often, but obviously pent-up demand for these months, March, April, May, we saw a high June, and that dropped off just a little bit in July at 507 new listings hitting the market. If you look at the other high numbers, we have May, and then we have September. Those are the 2 months where we have the highest volume, but usually July is very low in terms of, sorry, not volume, in terms of the number of listings that hit the market. Days on market, let's of course take a look at that statistic. So it looks like the median days on market for San Mateo County was 11. I'm not sure if that is accurate. I have to double check on that actually, because that seems like very low. If that is accurate, then that is crazy, that is how quickly homes have been selling. I mean, obviously, they actually turned off the clock on days on market for the months of March, April, May. And then they restarted it sometime in May. So there may be something iffy or funny about the numbers here that I am missing, but either way, homes have been selling fast, and I wouldn't be surprised if it's not too far away from this number, because homes are selling fast. I just sold one in 4 days. We sold another one in a week, and that's only because we set an offer date for that one. So homes are still moving quickly. Now here's a big indicator here is sale price to list price ratio. Obviously, we've all have been used to over the years a 5 to 10% sale price over the list price. A home is listed for $999, it sells for 1.1 or $1,080,000, or in some neighborhoods 1.375. But these last couple of months have really been that people have been listing their homes for around what the sales price should be, so around the market value. And that trend seems to be reversing again, in that I am starting to see people have been listing their homes for more aggressive list prices. So meaning they are listing it a little bit lower, looking for that multiple offer situation, looking for a ton of people to come through the house, looking for bidding wars, and kind of these teaser prices type deals. So San Mateo County, here are the cities. It's broken down, increased median price. I'll kind of try to go through this a little bit quick. Again, if you want the data, if you want me to send you this PDF, I'll be more than happy to. And so Menlo Park, we saw median sale price increase 58% from $2,060,000 at the same time last year to 3.2 this year. Portola Valley, Burlingame, all the big names that we see here. Now, San Mateo County increased median price. It continues. Okay, so we see some increases here, but a little bit smaller, nothing too significant. Let's take a look at where the major decreases came year over year. So Brisbane, not a ton of sales happen in Brisbane generally. So San Bruno is a bit surprising here that it dropped by almost 20%. Again, it's not a giant data point. I believe only 16 homes sold in San Bruno, so it's not enormous, but most likely that had something to do with I did see a lot of smaller homes generally going up on the market this year than same time last year. So that probably had an effect too. And then we see obviously Millbrae, and then Daly City had a little bit of a decrease. Now, increased median price, this is month over month. So Woodside, Menlo Park also. So Menlo Park looks like it had a really big jump. It looks like a lot of people maybe are moving to Menlo Park, and looks like a increased demand there. Same thing with Burlingame. So it looks like the really good school districts, really high price point, are seeing increased demand. Even Hillsborough, we saw a bump. Now, East Palo Alto is interesting because that was actually, it was such a drop year over year, or a month over month for last month, for June, when we were reviewing the data, that I was kind of expecting it that it would come back up over 1 million again. So we see that. Now we see San Mateo decreased median price month over month. So, oh, this is actually condo townhome data, and so was this one. So okay, I'm sorry. Oh, you see I dropped too quickly here. So we see increase, and so they're showing us San Mateo median price increases for condos, townhomes. Okay, so we do have a little bit of data here. Burlingame jumped up. This is year over year data, and then Pacifica condos, townhomes jumped up quite a bit. Foster City quite a bit. EPA and South City as well. Decreases. So Redwood City dropped significantly, median price. I'm not really sure what that's attributed to, other than maybe a lot of smaller condos just came on the market during that time. People probably needing bigger space. That probably has a lot to do with it. It's just people needing more bigger space in order to have a home office, or just tired of living in their maybe cramped little place. Shelter in place will definitely get you more familiar with your home. Millbrae, of course, so we're seeing Millbrae drop across the board, and then Menlo Park has dropped a little bit. So maybe these condo townhome owners moved up and caused a lot more demand for single family homes. Now, increased closed sales. So we're going to look at this kind of quickly, but yeah, the number of homes that were closed last month increased in these cities quite a bit, but most of these have a low number of transactions in general, usually, but this does seem pretty high. Hillsborough, 18 sales in a month. Belmont increased quite a bit. Redwood Shores, one extra home, not too many sales in Redwood Shores generally. Now, increased closed sales. Okay, it continues. So basically, closed sales increased month over month, it looks like, in a lot of these places, and decreases, not so many. Okay, month over month, so we're seeing that, yes. So just a lot more sales numbers increase month over month. And now let's take a look at new listings year over year. So yes, July obviously this year is quite busier than the last. I don't think we need to go through these numbers in that much of detail, but look at San Carlos is insane. 43 actually homes came on the market this year versus July of last year. So that's kind of insane. And it's still a hot market. So decreased new listings, increased new listings month over month. So we got some increases and then decrease. So yeah, more new listings hit the market last month than this month, but just a bit more. So I kind of predict that August will see a tad bit of a slowdown from July, and then September and October we'll see around the same numbers as last year. I think it'll hover around even, because what happens is this year, June and July basically picked up all of the slack from all of the homes that didn't list in March, April, May. And so that's why we're going to see these high numbers for June, July, August, September, October, and then back again with probably a normal cycle in November, December, January, and it'll kind of start going back to normal, assuming we don't have a very serious uptick in COVID cases and just a major issue that causes people to not be able to go see homes again. I'm just going to go through, increased days on market. So days on market has increased in some of these places, San Bruno, Millbrae, Half Moon Bay, Burlingame, just a little bit. Okay, but decreased. So the number of days on market went down quite a bit in Montera, El Granada, the coastal cities there, Redwood Shores, Hillsborough. Okay, so we're seeing quite a bit of decreases for days on market. Again, that's why I don't really trust that chart that showed that it's only 11. I have to double check that and look at my other charts and see what the real numbers are, but I'm sure they're strongly affected by that. They basically cut off that there was no days on market being counted during shelter in place because it wasn't really fair, for homes to be counted. Increased sale to list price ratio. Okay, so it increased a little bit, and then obviously a decrease year over year. Obviously, everything was selling significantly over ask last year, and this year is, the average is a lot closer to asking price. People are asking around what they want, but I'm seeing that what isn't reflected in this data live day by day is that that trend is starting to reverse back to look more like last year's numbers here than this year's. I am seeing more significantly over asking sales all over, not just in San Mateo County, in fact. So decreased sales to list price ratio for condos, townhomes. Okay, perfect. And that's it. So this one is going to be kind of short and sweet because it looks like we're starting to slowly get back into normal territory. Overall, my perspective is that we're seeing things slow down in some areas of San Francisco, maybe like the condo market, Soma, downtown, close, walk to work type of areas. Although I haven't really looked at the data and I'm not selling a ton of homes there right now, so I'm not super familiar with that. So maybe some of our friends there in the condo market in Soma and South Beach and Financial District and just all over there can kind of tell us a little bit more about what's happening there. But I'm seeing slowdown there, especially for the higher priced condos, and because the walk to work factor is not really there anymore, and the walk to fun stuff factor is not really there right now. So a lot more people are coming here to the suburbs of San Mateo County. Maybe not so much bang for your buck because the cities of Belmont, Mid-Peninsula, San Carlos, Burlingame, Menlo Park are not really much cheaper than the city. But what you do have, generally speaking, are better schools and more parking and better weather, and well, better depends who you're asking. I like the clouds and fog of the Richmond district, San Francisco, Miraloma Park, but depends who you're asking. So a lot more people, I feel, who were on the fence about whether stay in the city close to work or move to the peninsula, for all the benefits that I just mentioned. A lot more people who are on the fence are now off the fence in that direction. So that's my perspective right now. A lot of people are saying that a crash is coming and things are happening. Hey, you might be right, you might be wrong. I don't care. I don't have time for that. I'm selling homes. I'm negotiating. I'm putting homes on the market. I'm talking to people. I'm helping people. That's not my business. I'm not a predictor. If I was paid big bucks to go talk on CNBC and make a bunch of wrong predictions and be a broken clock that's right twice a day, sure, I would do that. But for now, I'm just going to tell you what I see happening right now. My, with caution, prediction is that we're not really going to see a significant move in price in any direction in the residential market in our areas. Things are cyclical, and we may start seeing people coming back to the city, and demand slow down here a little bit because it's so high right now. But overall, I think that if you're a seller of real estate, if you were thinking of selling, this is a great time. If you're buying, then prices are high and it is competitive. But if you're buying a home for your family to live in, then, you know, and you're thinking about how you're going to enjoy your life, how you're going to enjoy life with your family, how you're going to build out your backyard. And for me, I want to put a sauna in, and maybe you want a pool and have pool parties and a place for your kids to play and where they're going to go to school. Then whether you're, you know, buying at the peak of the market, or this isn't the peak and it's going to continue going up, or it is going to go down, well, that's not really super relevant, because you're buying this for yourself and to enjoy your life. So I think you have to separate buying a home for your primary residence with your money that you use to invest, and that's a whole different consideration. And I personally don't like mixing those two up. Do I like the fact that I bought a house and now it's increased in value? Yes, but that's not what I was gambling on, and that's not what I bought it for. So I knew that I could afford it at the time, and that's where my family's gonna live and enjoy their time. So anyways, if you wanna talk more, I'm here for you. I'm happy to help in any way. You know my number, 415-595-2647. That's my cell. My email address is joe@homesbyrise.com. Thanks again.